Good morning. Good to see all you guys. Welcome back to the Daily Grind. I'm your host, Chump Change. There's zero news today, so we're going to watch a few videos. Kind of, one's going to be explaining Bitcoin, and the other one is going to be just kind of what's next for crypto with Coin Bureau. So that's that. Literally, I've been searching all morning, and there's just nothing. Bear market blues. That's what's going on. All right, let's use in the chat, and then we'll get into this. I apologize for also the delay. My AirPods, for some reason, would not connect to my computer. So back to the plugged in earphones. That's how that goes. All right, let's see. Steven Cicero, what's up, buddy? Good to see you. We have Sadie Sometimes. Leo Lustig, what's up, buddy? AC Mining, Overboard Tech, Fudweiser, my man. Good to see you. Patty Whack Miner, Chris Hanley, Tim I Am Crypto, what's up, buddy? Good to see you as well. Hellish Miner, good to see you. Patty Whack Miner, I think I already said that, but Dumpster Fire, what's up, buddy? All right, I think I got pretty much everybody. Yankee, Carl Coat, and a few other people. Sasquatch Sasquatch crap, I don't know who that is, but welcome to the channel. I haven't seen you before. All right, let's get into this. Let's see what the market's looking like today. As you guys can tell, it's green. I just realized that as I was about to go live. Right here, 27,356. It's actually pretty decent. I was shocked to see it actually 27,000. I thought it was going to be 26. We have 1665 Ethereum. Let's see, Litecoin 66 bucks, Dogecoin 6 cents. We have XRP 50 cents, BNB 220. Let's go back to the crypto bubbles. We'll blow this up for you guys. So this is on the week. Everything's pretty much green. Let's check out the day. Big earners on the day. What do we got? We got Link 8.3%. We have XEC, which is eCash. I don't even know what this is. What is eCash? 18.1%. Has anybody heard of this? eCash? Personally, I'm not sure what that is. Let's see. Solana's up 4.4. I really do think Solana's going to have a huge pump as soon as this whole Visa thing goes through. To be honest, that's just my opinion. Mr. DJ Mines, good morning. Good to see you, buddy. All right, let's check out the Fear and Greed Index, though, blinding all of you guys. We have 46 on the Fear and Greed Index. Let's go to the top 10 coins by coin market cap, and then we'll get back into it. We have Bitcoin, Ethereum, Tether, BNB, XRP, USD coin. Wait, XRP flipped USD coin? What? Neat. Lido staked Ether. We have Cardano, Dogecoin, and Toncoin in 10th. What? Toncoin's in 10th? That flipped Solana? Interesting. Interesting Monday morning for sure. Litecoin still in 15th. Shiba's down to 17th. Huh. Neat. Is anybody still into Toncoin? I know that was like, this was the mineable coin, right? At one point, if I'm not mistaken. We're able to mine this for like a select few weeks or a couple months or something. Let's see. I wish I would have mined more Toncoin. Yes, okay. That's what I thought. So yeah, this was I didn't mine any of this either, but that's crazy. How much was it when it was able to be mined? Do you guys know? How long ago was it? Was it, holy shit, was it down here? Oh wow, I wonder if it was down here. That's crazy. Holy shit. Had quite the run up since August. $1.20. Why does that have such a run up? 50% move at least. Wow, that's crazy. Neat. All right, anyways, let's get into this. So this is going to be for the new people in the space. If anybody hasn't seen this, is from Altcoin Daily. It's actually really good. I might actually clip this up a little later and do a separate video on it myself on the channel, but this is Watcher Guru on X, or formerly known as Twitter. They actually put out a older video where this guy explains Bitcoin in a nutshell in like under 10 minutes, and that's exactly what Altcoin Daily took and just kind of plays that. And it's actually a decent video. I didn't get to listen to the entire thing, but I listened to most of it. So it's a very good explanation. And then we're going to talk about what's next for crypto with a guy over here at Coin Bureau. So let's dive into this one. If anybody's new here and you don't understand Bitcoin, this is definitely a video that's worth watching, right? Or at least if you're trying to get somebody into it, it's worth putting it on for them. So without further ado, let's dive into it. If you guys have any questions, just add me in the chat.
What is Bitcoin? What does Bitcoin do? Is it perfect? Neither.
And he stole my music.
Was email when it was invented in 1972.
This is the greatest Bitcoin explanation of all time. If you have a family member that doesn't quite understand cryptocurrency, send him or her this. They will thank you.
Thank you for the opportunity to speak with you today. My name is Peter Van Valkenburg, and I'm the Director of Research at Coin Center, an independent nonprofit focused on the public policy issues affecting cryptocurrency and public blockchain networks. What is Bitcoin? Bitcoin is the world's first cryptocurrency, and it works because of the world's first public blockchain network. What does Bitcoin do? It's simple. It lets you send and receive value to and from anyone in the world using nothing more than a computer and an internet connection. Now, why is it revolutionary? Because unlike every other tool for sending money over the internet, it works without the need to trust a middleman. The lack of any corporation in between means that Bitcoin is the world's first public digital payments infrastructure. And by public, I simply mean available to all and not owned by any single entity. Now, we have public infrastructure for information, for websites, for email. It's called the internet. But the only public payments infrastructure that we have is cash, as in paper money. And it only works in face-to-face transactions. Before Bitcoin, if you wanted to pay someone remotely over the phone or the internet, then you could not use public infrastructure. You would rely on a private bank to open their books and add a ledger entry that debits you and credits the person you're paying. And if you both don't use the same bank, well, then there'll be multiple banks and multiple ledger entries in between. With Bitcoin, the ledger is the public blockchain, and anyone can add an entry to that ledger, transferring their Bitcoins to someone else. And anyone, regardless of their nationality, race, religion, gender, sex, or creditworthiness, can for absolutely no cost create a Bitcoin address in order to receive payments digitally. Bitcoin is the world's first globally accessible public money. Is it perfect? No. Neither was email when it was invented in 1972. Bitcoin's not the best money on every margin. It's not yet accepted everywhere. It's not used often to quote prices, and it's not always a stable store of value. But it is working, and the mere fact that it works without trusted intermediaries is amazing. It's a computer science breakthrough, and it will be as significant for freedom, prosperity, and human flourishing as the birth of the internet. And Bitcoin is just the beginning. If we can replace private payments infrastructure, then we can replace other private choke points to human interaction as well. Now, why should we want to build more public infrastructure? Why should we embrace blockchains over corporate intermediaries? Why should we tolerate their inefficiencies and work to make them better? Why should we want the pioneers of this technology here in the United States and not fleeing overseas? A simple reason. Because the corporate intermediaries providing today's critical but privately owned infrastructure are becoming fewer, larger, and more powerful, and their failures are increasingly grave. So roughly half of all Americans, 143 million people, had their Social Security numbers exposed to hackers because of a breach at Equifax. The SWIFT network has relayed hundreds of millions of dollars in fraudulent transactions because of hacked member banks in Bangladesh, Vietnam, Ecuador, and Russia. The FBI suspects now that the largest of these hacks was perpetrated by North Korea. Corrupt, low-level employees at an Indian bank, Punjab National, were able to fraudulently certify SWIFT messages stealing $1.8 billion. It's the largest electronic bank robbery in history. In fact, it's the largest bank robbery in history.
That's crazy.
In October 2016, an estimated 1.2 million internet-connected devices were hacked and turned into a botnet that for several hours made prominent websites unavailable across Europe and North America, including CNN and Fox News, the New York Times, and the Wall Street Journal. Increasingly, physical machines are being connected to the internet to augment their capabilities. They're wired through servers that are owned and maintained by private and trusted intermediaries, the so-called Internet of Things. Pacemakers from St. Jude's Hospital have been hacked. Baby monitors from TrendNet have been hacked. And Jeeps from Jeep have been hacked to the point where they can be remotely commandeered and driven off the road. Now, those vulnerabilities are inescapable in systems that have single points of failure. It doesn't matter if the point of failure is a corporation or if it's a government. There shouldn't be a single point of failure. Similar choke points existed before the internet. If you wanted to deliver a message, you'd have to go through one of 3 television broadcasters or a handful of newspapers. Private corporations are essential, but no critical infrastructure should rely on 1 or 2. The internet removed single points of failure in communications infrastructure and ushered in a wave of competition among new media corporations building on top of its public rails. Blockchains can similarly disintermediate critical payments and IoT infrastructure. The technology is not yet ready to answer all of those questions today, but it is our best hope. And as with the internet in the 1990s, we need a light touch, pro-innovation policy to ensure that these innovations flourish in America for the benefit and security of all Americans.
And one more clip just to expand on that. Here is Brian Brooks, the former United States acting comptroller of the currency, explain the difference between Web 1, Web 2, and what cryptocurrency is Web 3.
So the characteristic of Web 1, if people remember their original AOL account, was an ability to look in a curated walled garden at a set of content that was not interactive but was presented to you on AOL the way that Time magazine used to show you the articles they wanted you to see inside of their magazine. Just you could see it on a screen. The innovation of Web 2 was that suddenly you could not only read content, but you could also write content. This is when the blogosphere became a big thing. People remember this from the late 90s, the early 2000s. The reason for the centralization of the internet, of course, was that all of that activity was being monetized by a very small number of companies. Facebook, as the chairwoman mentions, Google, and 2 or 3 other companies. What makes Web 3 different is the ability to own the actual network. And that's what crypto assets themselves represent, is an ownership stake in an underlying network. So when you hear people talk about, for example, layer 1 tokens, what they mean is this is your reward for providing the ledger maintenance services, the computing power to the network that on Web 1 and 2 was done by Google, right? So now people in my hometown of Pueblo, Colorado can actually own the Ethereum network, but they can't own the internet. That's owned by Google and a few other companies. That's what the project of crypto is all about, is allowing people to directly own the networks that have native assets that are supporting it, and that's the nature of decentralization, where the token holders are the people who control the asset, not Google.
Token holders, for our language here on the Hill, those are digital assets, right? Which are the keys to open up the ledger for you to participate, right?
Correct.
So describe to us how those digital assets fit into this internet revolution, Web 3.
So the concept is that you have sort of application layer tokens and you have protocol layer tokens. So if I'm an owner of Bitcoin, let's say that I'm a miner of Bitcoin, somebody who actually creates Bitcoin. The Bitcoin is the reward I receive for doing the work to keep the network operational, and that allows me to own a piece of the Bitcoin blockchain. Or take Ethereum, which is easier to understand. The Ether token represents an ownership stake in the network, but on top of that network are all kinds of apps that get built on the network, much like the apps on your phone depend on the underlying network existing that lets the phone operate. And so people will make judgments about which network is likely to win, and they will invest in the tokens in that network much the same way you might invest in Google stock because you think Google is going to scale access to the original internet. The difference being here, you can vote on what happens in the future of a proof of stake network, for example. You can get rewarded through a proof of work token for maintaining a ledger on something like Bitcoin. But the real message here is that what happens on the decentralized internet is decided by the investors, versus what happens on the main internet is decided by Twitter, Facebook, Google, and a small number of other companies.
If you're interested in learning more about cryptocurrency, click subscribe. We drop a video every single day, keeping you informed. See you tomorrow.
Yeah, that was a good video from Altcoin Daily. I'm glad they actually put that together because I didn't. I've never seen that original clip, the first one that he played with this guy talking, whoever this guy is. Again, I did find it on X though, so I'm or Twitter, whatever. It's so stupid calling it X. Does anybody agree? Like, do you guys hate that having to call it X? Would you rather just call it Twitter? I don't understand why you changed it. It drives me nuts, but whatever. Yeah, so I found it over there. Watcher Guru is a good person to follow. I think he actually shows it. Yeah, right here. Right, where is it? Okay, well, hold on. Let's see. Let me just mute this and we'll play it. Where does he show it? Where does he show it? Oh, there it is. Right at the beginning. A little bit. All right. Well, I clearly can't get it. Can't get the beginning. But anyways, you guys can see it. It's like a whale alert type deal. Some bullshit. Anyways. All right. Fuck it. I don't care. I don't care that much. All right. Let's get into it. This is going to be Coin Bureau. What's next for crypto? Crazy returns and full potential. Let's see. I mean, bear market blues has been pretty tough. It's been the tough, like, couple weeks, actually. I mean, I know it's been months, but whatever. Just calling it Twitter. Yeah, I agree, Patrick Murphy. Twitter for life. DJ Mine says, yeah, dude, I know you guys are like all obsessed. You like love Twitter, and I've never really used it, but man, calling it X is just so weird. Like I'm not a huge fan of it. But anyways, all right, let's get into this. This is Coin Bureau. Mr. Guy over here is going to explain to us what's next for crypto, hopefully. So I didn't listen to this, so let's find out. Hopefully it's good.
In crypto, it's often said that we are still early, meaning that most coins and tokens still have lots of potential. This, my friends, is an understatement. To put things into perspective, the total market cap of stocks is $90 trillion. The total market cap of precious metals is $15 trillion, and the market cap of just the US dollar is over $20 trillion. Meanwhile, the total market cap of crypto is only around $1 trillion, even though some coins and tokens could someday become serious competitors to stocks, metals, or even national currencies. This means that crypto still has unprecedented potential. So today, we're going to tell you exactly how it will achieve this potential, when this could happen, and just how large the returns could be. The first step to achieving crypto's full potential is awareness and education. This is simply because crypto can't receive investment or achieve adoption if nobody knows about it. It also...
And that's a good point. And that's probably why Altcoin Daily did put out that video yesterday, kind of just educational stuff, because people need to know about this before they're going to invest in it.
Can't receive investment or achieve adoption if people don't understand how it works or why it's valuable.
True.
Now, it's safe to say that awareness of and education about crypto has been lacking. Most of the awareness has either come from mainstream media, which is often aligned with the financial establishment, or from misleading advertisements, promotions, and partnerships, often from explicitly pro-crypto entities. Most of the education has also come from questionable sources, with most media outlets and influencers pushing content purely for the purpose of getting clicks or token allocations. The result is that there is a general shortage of quality information about crypto, but this does seem to be improving. That's ultimately because more and more people are looking for quality information about crypto. The size of the Coin Bureau is evidence of this fact. Of course, our style of content isn't for everyone, which is why we encourage anyone interested in creating quality educational crypto content to start doing so ASAP. The sooner crypto can establish reliable and trustworthy sources of information, the sooner that it will get the right kind of awareness and the right kind of education. The reason why it's been so hard to come by so far is because it's often more profitable to do other kinds of crypto content in the short term. This has given cryptocurrency a very bad reputation, and it's especially tough for those who are genuinely trying to educate others. But this seems to be improving too. Those who decided to take shortcuts when creating crypto content are slowly but surely reaping what they sowed. Think SEC enforcement actions and the like. Some countries, such as the UK, have also recently introduced strict regulations around crypto promotion. As concerning as some of these regulations are, they are arguably necessary to ensure that the next wave of crypto media outlets and influencers are focused on crypto content with long-term value. Now, it's not entirely clear when this shift will happen, but we seem to be at the beginning stages of it. By the time the next crypto bull market begins, it's likely that the quality of crypto awareness and education will be much higher than it has been.
Just to elaborate on what he was saying, I saw this earlier, but it wasn't important enough for me to bring up until right now. I didn't realize he talked about this, but crypto influencer arrested in Hong Kong for JPEX association. So apparently he was, let me see, where is this guy? Apparently he was like promoting some exchange, and they ended up, I guess it was just like a shitty situation. Hong Kong-based social media influencer has reportedly been arrested after investigations around the liquidity crisis of the crypto exchange JPEX traced back to their involvement, which is crazy. So like, yeah, that's what he's talking about. They're reaping what they sow, right? It's kind of like everybody promoting FTX. Same bullshit.
That will set the stage for crypto to reach its full potential. And if you want to help increase the quality of crypto awareness and education, go ahead and smash that like button. Now, this falls into the second step to achieving crypto's full potential, and that's regulation. This ties into awareness and education because regulators need to be aware of and educated about crypto in order to write good regulations.
True.
Institutional investors also need to be aware of and educated about these regulations. Now, as we've seen, regulators around the world seem to be both aware of and educated about crypto, for the most part. This is fortunate or unfortunate depending on the jurisdiction in question. It's becoming clear that some are pushing for pro-crypto regulations while others are pushing for anti-crypto regulations. Believe it or not, but any kind of crypto regulation will be a net benefit for the crypto market, so long as it doesn't involve an outright ban, of course. This is just because investors, notably institutions, will finally have some guidance about what they can and can't do with crypto in their country. And once these investors and institutions get involved, you can bet that they're going to lobby to improve crypto regulations to better suit their needs. If you watched our video about crypto lobby groups, you'll know that the crypto industry has already been lobbying, but with, well, mixed results. By contrast, some of you might recall that Fidelity had privately lobbied the SEC to approve a spot Bitcoin ETF back in September 2021. For context, Fidelity is one of the largest asset managers in the world.
Wait, what?
The fact that it was basically arguing with an anti-crypto regulator behind closed doors is extremely bullish. In retrospect, it's possible that Fidelity's lobbying is why BlackRock became emboldened to file for a spot Bitcoin ETF back in June. More importantly, Fidelity's past lobbying and BlackRock's present SEC filing suggests that these lobbying efforts will only increase. This will
I didn't know Fidelity did that back in 2021. That's crazy.
ultimately be a net benefit to the crypto market. The only variable is time. If you watched our video about Operation Choke Point 2, you'll know that the US crypto crackdown may not end until after the 2024 election. As for other jurisdictions like the UK and the EU, most of their crypto regulations won't go into force until later next year, also in 2024. Until that time, it's very unlikely that we'll see serious inflows into the crypto market. That's because investors won't feel comfortable investing in coins and tokens that could be classified as securities, and they definitely won't feel comfortable knowing that their fiat to crypto ramps could be cut at any time. As we've seen with jurisdictions like Hong Kong and Singapore, however, the presence of crypto regulations doesn't automatically result in immediate inflows. Even so, they are a prerequisite for these inflows to come. Without regulations, investors of all kinds just won't feel comfortable investing in crypto. Now, this relates to the third step to achieving crypto's full potential, and that's investment, specifically investment from institutions and high net worth individuals. Of course, these entities hold most of the world's wealth. This is a consequence of having currencies whose supply is manipulated by people in power. More about that in the description. I digress.
Literally every 5 minutes, or not even. I think he's mentioned another video 4 times since we've been watching. It's been 7 minutes. It's like that's the only annoying thing about Coin Bureau. I do love this guy's channel, but man, he references so much shit every 2 minutes.
Now, like all investors, institutions and high net worth individuals ultimately want to maximize their returns. As it so happens, Bitcoin's BTC is estimated to be the best performing asset of all time. From an initial price of 9 cents to an all-time highs of over $69,000, BTC has pulled a 760,000x return. Like all assets with such high returns, BTC's returns are likely to diminish over time, but it is still likely to outperform most other assets for the foreseeable future. This fundamentally depends on how much BTC will see in terms of inflows. Now, this is impossible to predict, but there is one benchmark to keep in mind. BTC is considered by many investors, including BlackRock, to be digital gold. As a result, it's generally believed that BTC's market cap will someday be similar to that of gold. Now, gold's market cap currently sits at around $13 trillion. BTC's market cap is currently sitting at around $500 billion. So, a bit of quick maths will tell you that BTC catching up to gold would mean a 26x increase in its price. This would translate to a BTC price of around 670k. What's interesting is that BTC's peak price of 69k put its market cap at around $1.3 trillion, which is coincidentally around 10% of gold's total market cap. Now,
That's kind of a neat fact, actually.
I'm pointing this out because some long-time BTC holders, such as the Winklevoss twins, have stated that they will only take profits when BTC's market cap gets close to that of gold's. What's fascinating is that BTC was rejected when it was around 10% of gold's market cap, a key price level pointed out in a report by Bank of America.
Oh, this is a really neat little clip here. That's neat. 1% is 6,500, 2% is 13,000, 5% is 32,000, 10% is 65,000. This is the gold market captured, by the way. 20% is 130, 25% would be 162,000, 50% would be 325, and 100% would be 650,000. Jeez.
In 2021.
That's cool.
In any case, this assumes that BTC is analogous to digital gold. Some have argued that BTC has additional value since Bitcoin is technically the most secure network in the world. This makes it the ideal base for other ecosystems, including payments, which can be supported by the likes of the Lightning Network. And speaking of payment networks, smart contract cryptocurrencies are generally believed to be the ones that will capture this market share. This means that they could someday displace payment processors and other financial intermediaries. Now, the total market cap of these companies is over $2 trillion. Given that the market cap of Ethereum's ETH is currently around 200 billion, matching analogous companies would mean a 10x increase in price. This would translate to an ETH price of over 15k. But this likewise assumes that Ethereum is just a payments network.
Now, real quick, do you guys agree that Ethereum will get to 5 figures at some point? Oh, geez, hold on. I don't even have the chat up. Mr. Crypto Frank, thank you for the super chat, man. Appreciate it.
Have you seen that Amex now offers NFTs?
Does it really?
The art part is dead to me, but it's interesting that a company as big as Amex is now introducing NFTs. Just seems more and more like these large core are walking into crypto slowly.
Yeah, dude, I didn't know that. That's really neat. Amex is like a gold and silver company. That's where I used to buy like bars from, which is pretty funny. Man, I haven't looked on their site in so long. But man, they're getting into NFTs. That's huge. That's a real big deal. And I mean, we're going to see this more and more. All these big companies are going to start getting into crypto one way or the other. I'm not sure NFTs are going to be the proper way to do it, but I think it's inevitable. But overall, Ethereum's price, what I was kind of getting at, do you guys agree or disagree that it's going to get above 5 figures? I'm going to put a poll in the chat in just a second.
It is obviously much more than that.
And Crypto Frank, thanks again. I appreciate that very much. Thank you.
As such, one could argue that Ethereum is still near the beginning of its adoption curve. And this pertains to the fourth step to achieving crypto's full potential, and that's adoption. Now, for reference, it's estimated that less than 5% of the world currently holds crypto. This implies that should more people choose to hold crypto, its price should have a great deal of upside potential. But of course, holding crypto is not the same as using crypto. The former effectively constitutes investment, whereas the latter is actual adoption. On-chain data for the largest cryptos suggests there aren't more than a few million daily users, a mere fraction of the world's population. Therefore, potential gains are even larger than one would expect by merely extrapolating hodlers. Now, for those unfamiliar, there are ultimately 3 reasons why people adopt crypto. The first is for profit, the second is for fun, which is very much intertwined with the first reason, and the third reason is out of necessity. And it's this third reason that has resulted in most of the actual crypto adoption. If you watched our recent video about what's going on in Nigeria, you'll know that up to half the country uses crypto on a daily basis. You'll also know that this is essentially because the government can't be trusted. This phenomenon is not unique to Nigeria. It's a trend that's been accelerating around the world. When you remember that most central banks are currently in the process of rolling out central bank digital currencies, or CBDCs, it suddenly becomes easy to imagine a world where the average person starts looking for alternatives to a digital currency controlled by institutions they don't trust.
Real quick, Crypto Frank, I apologize. I was thinking AppMex, not Amex. That was yeah, that's this. Let me see. American Express, is that what this is? I was just looking it up. Amex backs NFT platforms, one of. Interesting. I'm not. I've never held an American Express card or actually looked into American Express, but that's kind of neat. That's actually really that's kind of a big deal because American Express is huge. I don't know why I was thinking AppMex, but yeah, AppMex was one of those companies, gold and silver. I used to purchase bars from. Pretty neat. I appreciate the super chat. Thanks, buddy.
The demand for such alternatives may not be high for most citizens, but it is already increasing among some governments. It's well known that the so-called Global South is looking to move away from the US dollar, and there have been some reports that suggest that crypto could be a part of their escape plan. For instance, Iran recently gave the green light to companies in the country to use crypto for international trade. Russia is reportedly considering doing the same and is even considering mining its own crypto. North Korea, on the other hand, has been using its ill-gotten crypto gains to fund its military and nuclear programs. Now, before you freak out, take a second to consider that the first entities to adopt crypto weren't all that appetizing either. Back in the day, most Bitcoin adoption was related to criminal activity at the individual level. Think buying all sorts of naughty things on Silk Road. It appears that we're seeing the same crypto adoption process repeat, but on a national scale. And just like the adoption process at the individual level, the adoption process at the national level will eventually involve nations and national activities that are much more appetizing. This could happen much sooner than you think because central banks will be allowed to hold crypto starting in 2025. At that point, using crypto for things like international trade will become more accessible to the average country. At the same time, the tendency to weaponize fiat currencies will be increasing. This will increase the demand for credibly neutral currencies, and decentralized cryptos like BTC could play a key role. Now, this ultimately depends on the progress of the fifth step to achieving crypto's full potential, and that's innovation, particularly around user experience and privacy. Logically, it's going to be hard for individuals and institutions to adopt crypto in any meaningful way if they must fumble with hardware wallets all day long. That's why crypto wallets are a niche that you need to watch. There have been significant developments on this front, the most significant of which is the gradual merging between hardware and software. It might sound silly, but a crypto phone like Solana's Saga could be the solution to crypto wallet UI and UX. And it's not just wallets either. A lot of innovation is happening at the blockchain level. If you watched our recent Ethereum update, you'll know that its EIP 4337 upgrade from earlier this year will make it possible for any phone to have crypto phone type properties, mainly hardware wallet level security. You'll also know that it will make it possible to create dApps with no gas fees, or rather, dApps where the user doesn't have to pay the gas fee.
Mr. Rud Puts, thanks for the 249 euros, buddy. You're awesome.
Eagle, Smeagol going to make me one crypto.
Appreciate it, buddy. I don't know why it stopped. That's weird. Crypto coin AI swag. You're awesome. Thanks so much, buddy. So yeah, the wallets that he's kind of talking about, it's kind of neat. I was thinking about that the other day. Crypto wallets in general, are hardware wallets making you guys a bit nervous at all with the whole, you know, like the Ledger thing that was a couple months ago with the sharding stuff? There's just, I feel like there's got to be some sort of innovation when it comes to crypto wallets to have like actual mainstream adoption for people to, you know, want to custody it themselves, instead of just trusting like a Coinbase or, you know, just some random app on your phone. it just makes me nervous because like everybody, like people can hack into anything today, and I don't know, it's just it's concerning to say the least. Like where we hold our crypto, like can they actually be hacked into? I'm sure it's possible. I mean, Mark Cuban was just hacked for like like it was like 800 and something $1,000, and for like the average person, it equates to like $590 or something crazy. I saw a crazy statistic on that actually the other day or earlier this morning actually when I was looking it up. But I don't know. Let me know what you guys think. What do you guys use for hardware wallets? Put it in the chat. Just let me know. What's like your main hardware wallet that you use for your storage, and then what is your like checking account wallet? Like I use Trust Wallet on my phone for like the checking account style, you know what I mean? And Ledger would be my actual hardware wallet that I keep like, you know, my savings account type deal. Let me know what you guys use.
Constantly checking and accounting for transaction fees is another huge hurdle to crypto adoption, and it's one that many crypto projects are attempting to overcome.
Yeah, I use Tangem too, actually. Tangem as well.
This is going to require entirely new approaches, such as charging crypto users monthly subscription fees to use a blockchain rather than charging them for every individual transaction. Of course, some of these approaches will require entirely new types of hardware, like more interactive hardware wallets. And if you don't already have a hardware wallet, then the link in the description will give you a discount on some of the best ones out there. Moving on. Now, crypto privacy is another niche you need to watch. It goes without saying that privacy in crypto has been a touchy subject. On the one hand, crypto's transparency is a huge advantage. On the other hand, some degree of privacy is required for financial freedom, and it's demanded by high net worth individuals. On the ever-present third hand of government, there's a desire to exploit crypto's transparency to track every transaction and to label any attempts at crypto privacy as inherently encouraging criminality. For the crypto industry, this presents a very difficult problem of balancing transparency with privacy. Zero-knowledge proofs have emerged as one potential solution to this problem, but they come with all sorts of other problems. The primary one is ensuring that these zero-knowledge technologies don't have secret backdoors. Thankfully, this is an issue that can probably be addressed somehow. Regardless, the problem of balancing transparency with privacy is closely related to the problem of identity, which is another niche you need to watch. It's clear that countries are pushing for digital ID, and apparently global regulators want to see these digital IDs integrated with cryptocurrency. The good news is that the crypto industry has been working on its own supposedly decentralized digital ID solutions. The bad news is that these digital ID solutions are just as centralized as the ones from governments.
Of course they are. Of course they are. Real quick, so we're talking about in the chat, right? Somebody said, Sasquatch crap said, my issue with hardware wallets is trying to hold all the crap coins before they are supported. So that is actually one of the main reasons I do use the Tangem wallet, because they can hold a lot of the DeFi stuff, as well as like Octaspace, that Pac-Man coin. Like those are, you know, at the end of the day, I apologize for saying it, but they're shit coins, right? So all those shit coins, like even, I hate to say it, but Caspa, right? Caspa, I'm trying to get Dynex onto Tangem, but Caspa's on there, so like you can hold that on a hardware wallet now, which is nice. So it's I don't know, it's a really good wallet. Yeah, let me show you guys real quick so you guys know what that wallet is. At least this one right here. Put it on the screen. I do have a link in the description if you guys are interested. Feel free. I don't make anything off it, I don't think, but you guys do get like 10% off if I'm not mistaken. So it's literally like an NFC card. Let me see. Hold on, let me zoom out a bit. Where is it? So you can get a pack of 3 cards. This is actually the new style card. They actually have like a seed phrase and stuff now. They never did before. It was just like made in the, as soon as you started up the actual card itself, it would just generate its own internal seed phrase where you wouldn't have it. But if you lost the cards, you effed. You can't like recover it, right? So yeah, this is the new one. So the new card's like, it's for a 3-pack, $62. This one has the seed phrase, so you can actually get out of it. And the classic card that, like, you know, these are 3 cards, you lose one, you're screwed. It's $50. So I mean, it's totally worth it. It's super cheap for a hardware wallet, at least in my opinion. But again, if you guys want to use the link, feel free. If you don't, no big deal. But I definitely highly recommend that wallet, to be honest.
What's needed is a truly decentralized digital ID. We have yet to see any significant development on that front. For what it's worth, though, the innovations around wallets and privacy continue at a rapid pace and should be in place by the time the next crypto bull market comes around. This will further facilitate crypto investment and adoption at both the individual and institutional levels. There is just one thing that crypto will need then. So, the final step to achieving crypto's full potential is full decentralization.
So fully electric, the new Tangem cards allow you to take your seed phrase off. Not the old ones, but the new ones do. They just came out with them like last week.
No mistake. Without decentralization, everything that I just mentioned is off the table. That's because if crypto is centralized, then it can be controlled. And if it can be controlled, it'll end up like the existing systems we have. Newsflash, but the entire purpose of crypto is to replace the existing systems we have with something better, starting with our monetary and financial systems. Naturally, the technology that underlies crypto is extremely powerful. The only way it won't fall into the wrong hands is if it's truly decentralized. If you watched our video about decentralization, you'll know that it doesn't just mean having lots of validators or miners. It means having a decentralized developer base, a decentralized coin or token distribution, a decentralized infrastructure layer, and of course, a decentralized blockchain. Ultimately, this also means having a truly decentralized internet. Luckily, the internet is decentralized to some degree, and it will likely become more decentralized as peer-to-peer internet crypto projects like Helium see more investment and adoption. And this
hold on. Did you just say helium?
Decentralized blockchain.
I wasn't listening.
Ultimately, this also means having a truly decentralized internet. Luckily, the internet is
I'm gonna burn this video on my channel now. I'm gonna take it down and talk about helium.
Decentralized to some degree, and it will likely become more decentralized as peer-to-peer internet crypto projects like Helium see more investment and adoption.
Bullshit. You think helium's going anywhere, guys?
And this adoption will likely be necessary due to internet censorship. Anyway, speculation aside, the fact of the matter is that most cryptocurrencies are currently not decentralized enough to evade control. It stands to reason then that these cryptocurrencies will not be the ones that make it.
I honestly can't believe he even just mentioned helium. That's crazy.
If you hold centralized cryptos, you're not early, you're late. Very late. That said, this depends on whether the centralized cryptos you currently hold can become decentralized. To figure this out, you just have to ask one question. Is this crypto capable of building its own infrastructure and ecosystem without relying on a single set of individuals or institutions? You'll quickly find that the answer for most cryptos is no, but that's not entirely their fault. From our perspective, one of the primary reasons why so many cryptos are so centralized is because of funding. Early investors in crypto projects want to see returns and often try to control the project to that end. This creates incentives for crypto projects to cut corners on decentralization to ensure that their investors are quickly rewarded. As we've seen, these so-called VC coins have seen the most aggressive pump and dump cycles, and most of them probably won't last past the next crypto cycle. The silver lining to this situation is that it puts the solution to crypto's centralization problem on full display. The crypto industry needs to find a way to fund crypto projects in a more decentralized manner. Now, this can theoretically be done using DAOs, but the thing is that most DAOs are also quite centralized. Luckily, there's a solution to DAO centralization too, and that's to create new kinds of governance structures. This will be easier to do with new innovations like truly decentralized digital IDs, which I'll reiterate are badly needed. The way that things are looking, this could be a story for a future cycle. Even without these innovations, though, the next crypto cycle looks promising. If you're watching this video shortly after it's been posted, you are perfectly positioned to take advantage of the opportunities that are coming. All you need to do is pay attention and not feel rushed. After all, you're still early. And that's all.
At least we like to think we're still early, right? At least we like to think so. All right, let me see what you guys are saying in the chat. in this this poll here we got. Let me blow this back up so you guys can see me. We're going to be getting out of here in a minute. I appreciate you guys hanging out with me, but what do we got for this poll? So I said, do you think Ethereum will get over 5 figures, aka 10K plus? 59% of you said yes. No was 29%, and not sure, to be honest, is 13%. Neat. I'm hoping it gets over 5 figures, but I guess we'll have to see. I don't see why it wouldn't, to be honest. When the next bull run happens, if Bitcoin can break 100K, I don't see why Ethereum's not going to 10. That's just my opinion, but I don't know. You guys let me know what you think about that. But when, though? It's going to be a little bit. Probably 2 years or so, if I had to guess. It would probably be... I honestly don't think we're going to see a real run up in Bitcoin probably until about 18 months or so after the halving, if I had to guess. So I think we're going to be in a long ways awaiting after the Bitcoin halving. But that's just me. I think it took like what, a year? Was it a year from the last time? I don't even remember, actually. I'd have to look it up, but whatever. I've been holding my mind ETH for a while now. Yes, me too. I need my COD. Me too. All right, let's see. Are there any other questions in the chat? Son of a Rabid Panda, I totally think you should do that poll, by the way. He said, do you think Elon Musk will kill me if I do a petition to rename X to Twitter if I get 2 billion signatures? It would be absolutely hysterical if that worked. You should definitely do it, though. Why not? When grid seed? Oh, God, I know. You know what? I just don't know anything about grid seed mining. I've never given it a shot. I looked up a couple of videos. They're like 9 years old, 10 years old. I don't even know if they still work. I have no idea. But it's all mainly like Raspberry Pi shit. So I have to like sit down and figure it out because I'm not like a Linux guy. Setting up Raspberry Pis are definitely not for simple-minded, right? Sometimes it takes a little bit of effort to get this thing working. Let's see. Bring on 2025 and 2030. Gonna be nuts. As long as rest of the world doesn't go to shit by then. Yeah, as long as we don't have World War III, I think we'll be all right. And I do think that crypto will pop off at some point soon anyways. All right, let me change this colors back to blue. I like blue better. All right, yeah, fully electric. So they're the new tantrum cards, so they do allow you to have your seed phrase now, and you can't take the seed phrase off of the card. So I'm assuming you can punch the seed phrase into a new card and get, you know, an additional 3 cards if you wanted to, because I thought that was probably the only bad part of the design for the NFC cards. I like the fact that you have, you know, a card you got to scan, and then on top of the scan in the card you have a pin code you have to type in, and if the person doesn't know your pin code, if they stole your card, they can't get into your wallet. So I loved that, but the fact that if you lost all 3 cards, you'd be effed. Like, you can't recover your funds if you lose all 3 cards. Say like house fire, these things melt down, you can't get your crypto back because there's no seed phrase. So now with the new, like, it's like $10 more for the new 3 cards that have the seed phrase, I think you can recover, I would assume you could recover your wallet. So that's kind of a good a new plus. I have to reach out to them, see if they'll send one over for review. Let's see. Is a plug and play guy? Yeah, dude, absolutely. Who doesn't want to be a plug and play guy? I like mining and stuff, but man, I'm not a computer guy. I'm a plumber by trade. I don't do computer stuff. Like, I obviously do, but it takes me a bit longer to figure it out, but it's all right. When I do figure it out, I actually do step-by-step guides to teach you guys how to do stuff because it's tough. But anyways, guys, hopefully you have a happy and safe Monday. Enjoy your day at work. Hopefully it's not a terrible place for you guys to go to. Hopefully you enjoy your work. But again, have a good week, and I'll catch you guys bright and early tomorrow morning for the daily grind. Hopefully there's some news tomorrow. I'll catch you guys soon. Peace out. Have a good day.